Switzerland's gross domestic product rose unexpectedly in the last quarter. Swiss GDP rose to a seasonally adjusted 0.2% from 0.6%. To discuss the unexpected rise, currency movements and predictions, I'm joined down the line by Alessandro Bee, fixed income strategist at Bank Sarasin. Alessandro, analysts had generally expected Swiss GDP to fall minus 0.3%. So what is the reason behind this surprise result today?
It was a surprise, but I would say a positive surprise. Swiss GDP numbers have been pretty solid, especially if you compare them to GDP numbers of other industrialized nations. I mean, if you look at the US or the UK or Germany, all saw their GDP shrink in the first quarter. So it was a positive surprise.
Because of the instability of the outcome of the Italian elections, are investors flocking to the Swiss franc as a safe haven?
Well, that's what happened in the last days. I mean, the Swiss franc lost ground in early 2013 as the periphery regained some of the confidence it has lost before. But with this deadlock situation in Italy and the fear that this might translate into a long-lasting political deadlock, some of the confidence has been lost again. However, what we also see is that the global economy is recovering, and I think that this is the more important driver for the Swiss franc in the short term. So in the short term, I see the Swiss franc somewhat weaker.
What effect did Ben Bernanke's comments in Washington on Tuesday, sticking with monetary stimulus, have on the Swiss franc?
Well, Bernanke's comment helped the Swiss franc, but just a little bit. I mean, in general, more accommodative monetary policy in the US is a factor which weakens the Swiss franc, as investors expect a stronger global economy if the Fed sticks to its monetary stimulus, which in turn reduces the tail risk in the global economy. But if you look at the development of the Swiss franc in the last day, Bernanke's speech was somehow overshadowed by what has happened in Italy. So it was helpful, but not very much.
What do you expect to see from Swiss PMI data out tomorrow? Will we see an improvement since there's been a rise in business sentiment in neighbour countries such as Germany?
I see a further improvement in the PMI. The manufacturing sector in Switzerland has traditionally a large exposure to Euroland and especially to Germany. Now, we have seen some improvement in German business sentiment, for example, in the IFO index, and this may translate into stronger Swiss PMI data as well. However, I only expect a small improvement because the PMI already jumped in January.
And lastly, Alessandro, what do you expect to see from the Swiss currency in the next few months?
Well, as said, short term, I see the Swiss franc a bit higher, maybe climbing against 125. If Italy somehow manages to find a way out of the political chaos. But medium term, let's say in the second half of the year, the Swiss franc is likely to get stronger and possibly is testing also the 120 cap again. I'm rather cautious for the performance of the global economy in the second half of the year. The fiscal drag in the US and maybe elsewhere may lead to some disappointments with regard to growth. And in a global economy which decelerates, financial markets are much more prone for risk aversion, be it from the euro debt crisis or from the still unsolved US fiscal discussions. And in such a situation, investors will probably go for the Swiss franc.
Thank you to Alessandro Bee there for his insights into the Swiss franc. For an overview of this week's events, check out our weekly wrap-up interview tomorrow with Thomas Taplin. Take care.